is Standard & Poor Global downgrades the city of Chicago's credit rating to a scooch above junk bond status, two grades above junk bond status. We've got Let's Go Brandon Johnson wanting to essentially put over $800 million on a credit card. Should work out fine. Let's get into it. Here we go. This guy, this guy, what is this guy do? Oh, he's a former teacher and he's a progressive. This is kind of what you get. Chicago mayor wants to borrow $830 million, which could benefit his Chicago teachers union cronies. Keep hearing about the Chicago Union Teachers Association. Yeah, just some crazy stuff, right? We're going to stick to money on this one, though. Mayor Brandon Johnson, Let's Go Brandon Johnson, asked to borrow $830 million one day after the city's credit rating dipping to near junk status. He would have broad discretion over how to spend the money, including on his friends at the Chicago Teachers Union, because he is a former teacher and he is a progressive. And this is what they're doing. This is what they're doing. Chicago Mayor Brandon Johnson asked the city to take out $830 million in bonds. Just one day after Chicago's credit rating just boop went down. This is according to Standard & Poor Global. But don't worry. Johnson claims that the bonds are for infrastructure and capital improvements. But there is broad language in how the money could be spent. He could use it for the contract his former co-workers of the Chicago unions are seeking. Chicago teachers unions are seeking. Yeah, let's do this one. Oh yeah, let's do this. Infrastructure? Oh no, let's just do it for salaries. Let's just get my buddies. Enlisting acceptable uses for funds. The ordinance includes loans or grants to assist individuals, not-for-profit organizations, or educational or cultural institutions, or for-profit, yada, yada. What a bunch of nonsense. Johnson could use the borrowed money to pay for the city's contract with the Chicago Teachers Union. He's in the middle of contract negotiations. I mean, doesn't this just make sense? A teacher who, not all teachers are bad with money. You know what I mean? But when you are running a massive, I'm not saying teachers in general are bad with money, but when you're running a massive corporation like the city of Chicago, that's essentially what it is. It's a massive nonprofit organization, right? Some would say it's for profit. And then you've got a guy like Let's Go Brandon Johnson in there. He doesn't know, he doesn't know his butt from a hole in the ground financially, literally. And most of these folks do not. Standard & Poor putting Chicago's credit rating from BBB plus, triple B plus to BBB. It's just if you're not familiar with that, credit rating, it's just a grade. You got AAA plus, triple A plus, triple B plus, triple B, 2 grades away from junk status. It should be enough reason to reconsider borrowing nearly $1 billion. Oh, hey now. Oh, Illinois Comptroller Susanna Mendoza said council members should reject the added debt. It just doesn't sound like a good idea, does it? No. Meanwhile, I strongly urge the members of the Chicago City Council to vote no on the additional $830 million in borrowing. If Johnson insists on pursuing a path leading Chicago over a fiscal cliff, boop, you should choose to avoid that cliff dive. Yeah, not good. Now, let's take a quick peek and see what caused the credit downgrade. Yeah. The budget passage, I mean, that's in broad strokes. That's what we got going on. So what you're looking at is just inability to manage large sums of money. And that's what you've got going on in a lot of big blue liberal cities, Chicago being one of them. They spent how many hundreds of millions on the illegals and then realized, oh my word, this is going to cost a lot of money. And then, could we get some federal help up in here? Well, Let's Go Brandon Johnson. I don't know what this guy's doing. So the downgrade comes after the city council passed a 2025 budget without a property tax increase to close a nearly $1 billion deficit. Remember when Let's Go Brandon Johnson said, hey, let's raise property taxes by $300 million. And all 55 or 52 or whatever council members said, no, we're not doing that. And we don't play that game. We're not doing that. Well, now, instead, Mayor Brandon Johnson's office relied on other measures like a $40 million line of credit. A line of credit. And you know what? Cities use, municipalities use, they use lines of credit. It's, we got money coming in here. We got money coming in there. We need money for this, whatever. Let's make a strategic move. Let's put $1 million on that line of credit, whatever. I don't have an issue with that. And sometimes it's, there are times when if you're building infrastructure in a business, in a company, you need to spend some money to make some money. That's when you take that risk and you put it on a line of credit, whatever. You borrow it from the bank, whatever it might be. So we got a $40 million line of credit, $10 million in special events reimbursements, $5 million in gas and electricity savings, and $1 million in staff cuts across city departments. There were also several fee increases to raise revenue. And you can only cut taxes so much, and then you got to raise, you got to do something to get your revenue up, right? So the article goes on to say why you should care, why Chicago should care. Credit downgrades are important because they can make borrowing money more expensive in the future. Because people are going to look at that credit rating and go, it's like when you get your credit rating, looked at. When you go to buy a home, you're going to qualify for a mortgage. Get your credit pulled, right? Get your credit pulled probably a couple of times, once at the beginning and once towards the end. Is anything going on here? Did you buy that Ferrari you've been hankering after, while you're in the middle of trying to qualify for $1.2 million home loan? Because that's a big no-no, by the way. You just don't want to go there. I've had so many loan officers tell me, you won't believe what happened. Oh, tell me. My client went out and bought a Ferrari. Oh, sorry to hear that, because now your loan isn't going to close and you aren't going to make any money. So we got credit downgrades, not a good thing. But let's go Brandon Johnson. He doesn't believe that the downgrading by Standard & Poor Global is accurate, because he's a former school teacher and now he's the mayor of Chicago. See where I'm going with this? Yeah, doesn't make a lot of sense, does it? But anyway, let's go ahead and let's go Brandon Johnson borrow $830 million and just see what happens. Just see what happens. I mean, just send it out there. Why not? The rating is like the city's credit score, meaning lenders use it to determine how much to charge the city to take out a loan. The city uses taxpayer money to pay back such loans as well as the interest payments. So you've got a deficit. And you know what? You've got a deficit throughout, a ton of municipalities, a ton of governmental structures, because you had the whole pandemic. You shut things down. You don't have anybody working in your downtown core. Your commercial real estate values have tanked. I mean, some of the numbers that we're seeing they're crazy. Some of the numbers of valuations before pandemic versus what they're selling for now in like San Francisco are nuts. Property values have declined like 90% in some of these buildings because there just aren't enough tenants to go around, and you've got a whole bunch of folks working from home, and you've got these massive, massive vacancies. It's all over the United States. It's not just Chicago, and it's not just, an individual deal. And I'm not saying that this is because of Chicago's vacancy factor in their downtown core. I think their downtown core is actually doing okay-ish, right? Whereas like Seattle and Portland and San Francisco, not as much. So let's go Brandon Johnson. He doesn't really think that their credit rating should have been downgraded. We do not agree is our next segment. The other side, Chicago officials argued the credit downgrade doesn't reflect the city's financial outlook. Let me read that again. Chicago officials argued the credit downgrade doesn't reflect the city's financial outlook. That's exactly what a credit rating is. It reflects the city's outlook. That's literally what a credit rating is. But, let's not worry about that. It's like saying, oh, a stop sign. That doesn't mean you have to stop. No, that's, red, octagonal. It means stop. It literally means stop. Johnson's office pointed to the economic output, city's economic output, which is larger than most countries. Doesn't matter. What are your expenses? Nobody cares if you have a huge output. You know what I mean? The Johnson administration also pointed out that Standard & Poor commended the city for its $272 million advance pension payment in its 2025 budget. That doesn't mean the overall financial condition of Chicago is either here or there. That's giving you kind of a gimme. Hey, that's an attaboy. You got an attaboy there. Let's go, Brandon. You got an attaboy. All right, we're going to downgrade these guys. But we want to give them an attaboy so that they can point at something and go, we're doing a good job here. We're really managing this city great. It's all great. What they're saying. Johnson said, despite that downgrade, the city will continue to meet its fiscal challenges head on by using a credit card to pay who knows what down the road. It is. It's mind-blowing that you've got folks like this in a position of power where they are essentially saying the credit downgrade doesn't really reflect the city's financial outlook. Do you know what I mean? You've got council members and you've got Let's Go Brandon Johnson, who I don't think could fight his way out of a wet paper bag, but let's let him run a multi-billion-dollar corporation and put him in charge of let's put him in charge of credit ratings. The Standard & Poor report focuses on the fiscal challenges we face. Yes, it does. That's the very basis for how you judge whether an entity is going to be able to repay that debt or not. I don't know if you knew that or not, but yeah, I'm joking. I'm just absolutely making fun of this because it's ridiculous. It's ridiculous. But it does not accurately reflect our fundamental economic strength and the steps we've taken to address legacy issues. Okay, like what? What are we doing? My administration remains committed to working collaboratively with the city council to achieve structural balance and strengthen Chicago's financial future, he said. But Standard & Poor just downgraded you to 2 levels above junk bond status. Okay. So by working towards trying to achieve structural balance and strengthen Chicago's financial future, what are you talking about? Literally, what are you talking about? This is just babble. This is Kamala Harris babble. It's word soup. It's just, okay, whatever. We do not agree. Here it is. We do not agree with this rating adjustment, as it does not accurately reflect the strength of the city's credit. We have taken deliberate steps in recent years to stabilize pension funding and maintain strong liquidity. Moving forward, our administration will continue to prioritize structural reforms and collaborative solutions that ensure Chicago's financial resilience, she said. Okay, but your credit rating just got downgraded by one of the big boys. Yeah, that happened. But you know what? Let's just go with, you're in charge of whomever made this statement. Who made this statement? She said, Jill Jaworski. Oh, the city's chief financial officer. Okay. All right. So she's probably got some kind of financial background. I would assume. I don't really know, but let's go with benefit of the doubt. She understands. Okay. How a ledger looks, what it should look like. You got this on one side and you got this on the other side, right? But she should also know that literally what Standard & Poor has just issued is a reflection of the strength of the city's credit. That's what it is. That's literally what it is. I don't want to belabor that point, but that is the entire point of this podcast, is you've just got a bunch of knuckleheads running around, just saying stuff that doesn't really have any bearing on reality. And the reality is is that Chicago's got some issues. And it's because they had their whole budget thing and they, it's like the stock market. The stock market gets, gyrates when things aren't level, even keel. When you've got irregularities, when you've got stuff that rocks the market, that's when stock market loves to have stability, right? And with Let's Go Brandon Johnson, he just kind of jets off on one point, then he goes to another point, and he does this. And, he's reactionary. He's trying to get from point A to point B, and he doesn't really know how to do it. And he's going to just go, am I going in the right way? Am I headed in the right am I going this way? You guys agree? Oh, no. Okay, well, let's go the opposite direction, go over here. So, what I see Brandon Johnson doing is just basically taking some looks at what he could do and throws them out there and sees if it sticks to the wall. And if it doesn't, that's what we do. It's what we do here in Chicago. We just kind of see what works and what doesn't. And, that whole Standard & Poor thing, that's troubling. I have concern with the Standard & Poor credit downgrading. This has been going on for a while, right? Chicago's credit rating has been downgraded. It's been downgraded multiple steps since I've been following Chicago in general. There's just a plethora of news stories that come out of Chicago. And you know why? It's because you've got leadership that doesn't really know how to lead, and you've got leadership that has no business running a multi-billion-dollar corporation with cash flows in and out of like the city of Chicago has. When you've got progressives in there, they don't really know. I mean, they just literally don't know. So many of the news stories following in Chicago, take for instance, Tiffany Henyard, the mayor of Dalton, the supervisor of the township of Thornton. She doesn't know anything about finances. She doesn't know when to keep a receipt. She doesn't know anything about anything. She's a wannabe hip hop artist. She just released a rap video as she's supposed to be campaigning for the election today for her job as, the mayor of Dalton. She's literally releasing a rap song, and not showing up at meetings and not really campaigning. I think she knows that she's all done. But one of the reasons she's all done is because she didn't understand going into being a mayor that there's going to be a series of checks and balances, and that eventually you can overspend, but eventually people are going to go, what are you doing? What's going on here? And if Tiffany Henyard, mayor of Dalton, if she had a credit rating right now, literally the best example of this is she is not insurable. When the city of Dalton went to get insurance, liability insurance, municipality insurance, insurance for their cars, insurance for their buses, all that good stuff. When they went to get insured, the mayor of Dalton, Tiffany Henyard, had so many lawsuits, over 48 lawsuits against her, that she wasn't insurable. The insurance company said, we'll give you this high premium, low coverage policy, but we're going to exclude one person, and that's Tiffany Henyard. And she's running a village of 20,000 people, 22,000 people. But more importantly, she's the supervisor of a township that comprises 17 villages. It's big. It's the biggest township in all of Chicago. So you've got folks that get elected that have no business running these shows. And that's when you rely upon, your chief financial officer. But from the top down in one of these organizations, you can see what you got, which is, we think the credit rating should be something else. Well, based on what? Well, we did do that, and we did do that. And you're like, yeah, but Standard & Poor doesn't dick around with that just because, right? It's based on, we got these numbers, we got these numbers, we got these numbers, you've got these cash flows. Yeah, we don't think you're a great credit risk. Therefore, anybody looking to lend to you, needs to get, they need to get some up front and they need to get an interest rate commensurate with the risk. So this story here, I mean, it's just not shocking. Let's go. Brandon Johnson just kind of pulls stuff out of his backside, throws it out there. And then, when everybody says no, he's like, oh, okay. So then what should we do? What can we do? What would be good here? Any recommendations? Let's crowdsource a solution for our $1 billion budget deficit. Ideas, guys? Any ideas? Any ideas? Yeah. It's crazy. As I am speaking right now, as I'm recording this for you, the mayoral election in Dalton is happening right now. It's happening right now. By tonight, we will know that dictator of Dalton, Tahoe Tiff, will not be in office. She got booted out. And I don't think Let's Go Brandon Johnson's going to make a second. He's not going to make a second term here as mayor of Chicago. They're going to move somebody else in. His ability to lead is compromised, shall we say. All right. That's it for me on this one. Thanks so much for being here. I'll catch up with you in the next one. Bye for now.